I think you have to start with some ideas. Many words are thrown around without us being very precise about it. So, for example, inflation is a word that refers to an increase in prices, but oftentimes that's then converted into consumer inflation, which is an increase in the price of a market basket of consumer goods defined by the government. But if you think broadly about what is inflation, inflation is simply the price appreciation of anything. And the economy consists of hundreds of thousands of things. And so there are hundreds of thousands of different inflation rates. And if you track the rate at which prices increase of consumer goods, you're going to generally get a low inflation rate. And if you have the flexibility to pick what goods you put in the consumer basket, you can pick consumer goods that have very little energy content or material content in them, that are easy to manufacture with capital or machinery or computers, and they will have a very, very low inflation rate.
The famous author of Rich Dad, Poor Dad, Robert Kiyosaki, advises buying Bitcoin, gold, and silver today before traditional markets crash. Kiyosaki stresses the importance of owning these assets now, as he predicts a rush when stock, bond, and real estate markets tumble. Kiyosaki forecasts Bitcoin at $500,000 by 2025, but he sees it potentially hitting $1 million in a global economic collapse. Kiyosaki believes the U.S. economy is in trouble, and he sees fiat money losing value while assets like gold, silver, and Bitcoin shine. Bitcoin's history suggests it reaches a specific level before each halving event, and this time it could be $48,700. The halving event, where miners earn less BTC, has historically led to significant price movements in Bitcoin. Bitcoin's connection to the 78.6% Fibonacci retracement level is a key indicator for its price movement. While historical trends provide insights, the crypto market remains volatile and influenced by various factors. Grayscale Investments, fresh from the legal victory, plans an Ethereum futures-based ETF. Caitlin Long, CEO of Custodia Bank, defends cryptocurrencies, likening their evolution to the tech bubble. Floki, inspired by Elon Musk's dog, outperforms meme coins like Dogecoin and Shiba Inu, with a 96% increase this year. Anthony Scaramucci of Skybridge Capital remains optimistic about Bitcoin's future, believing every Wall Street firm will sell Bitcoin ETFs. He sees young generations mainstreaming Bitcoin, comparing it to the internet's adoption. Despite optimism, macroeconomic challenges persist, including higher interest rates and regulatory issues. Scaramucci anticipates Bitcoin ETFs becoming widespread, leading to massive adoption as every Wall Street firm joins the market. Bitcoin faces U.S. dollar's strength. Bitcoin experiences a 2% drop against the U.S. dollar due to the Federal Reserve's hawkish stance. Hawkish central bank policies inflate the U.S. dollar, creating headwinds for cryptocurrencies. Ethereum also faces a decline, but the broader altcoin market shows mixed performance. Global cryptocurrency market capitalization remains at $1.05 trillion, with Bitcoin dominance at 50.17%. Let's continue our enlightening discussion with Michael Saylor.
Over 100 years, human beings get better at manufacturing things like streaming Netflix videos. If you think about the cost to manufacture Beethoven's Fifth Symphony 200 years ago or 100 years ago, it was an orchestra. It's very expensive. And the cost to listen to Beethoven's Fifth Symphony today would be not even a penny. So we're good at creating certain products or services. But on the other hand, other things you can't easily manufacture with capital or with a machine. An example of that would be an acre of beachfront property in Palm Beach. So if you track the inflation rate over 100 years, you might conclude it's 2% if you tracked the consumer basket of goods defined by a political organization. But if you actually were keeping track of the cost of gold over 100 years, you would find that that gold went up in price not by a factor of 20, but by a factor of 100. So the inflation rate of consumer goods looks like 2%, but the inflation rate of gold looks like much higher, 4 or 5%. And if you actually looked at the rate at which an acre of land in Palm Beach goes up over 100 years, it goes up by a factor of nearly 1,000. So the inflation rate starts to look like 7 to 8% a year. So I think the first thing you have to consider is inflation is a vector, and if you focus upon consumer inflation, you're just looking at the price of highly manufactured products that generally have a quality that's deteriorating continually, and so consumer inflation is the amount of money you need to stay poor and live a lower middle class lifestyle. On the other hand, monetary inflation or asset inflation is the rate at which you have to accrete your wealth in order to stay wealthy, and if you want to become wealthy, you have to beat that number. So the monetary inflation rate in the U.S. has been about 7 to 8% a year for 100 years. The consumer inflation rate's only been about 2% for 100 years. And so the reason that this is an interesting issue is right now those monetary inflation rates have exploded. The monetary inflation rate outside the U.S., especially in weaker countries, is often double, so it's 14% a year. And since COVID, monetary inflation rates leaped because as countries run large deficits, they actually print money that they can't pay back. And so the inflation rate of many scarce desirable assets went up much faster than 2%. In fact, the money supply expanded by 40% or more over a couple of years. So let's think about what is money, right? Well, everybody uses money to mean something different. Some people think of it as currency. Well, the dollar or the euro is a currency, a paper currency used as a medium of exchange. Money, you could think of it as your economic energy or your wealth. So if we talk about, how do I keep my money? You could also think of it as capital. How do I keep my capital? Capital is like economic energy. So if you want to retain capital or you want to keep the value of your money, you're going to have to convert it from a currency into an asset. And then the question is, what asset? If you had all the money in the world and you bought up all the dollars 100 years ago, then the money supply, the currency supply of dollars doubles every 10 years. 7% a year means that every 10 years you cut the value of your holdings in half, by the law of exponential math. So think about what happens if I double the currency supply every 10 years for 100 years, right? And there's a whole set of dynamics of people that are actually passing laws to basically deprive you of your money. If you own assets that generate rents, that's a currency derivative. The rents are going to be devalued. If you own bonds, that's a currency derivative. They're going to be devalued. And every single fiat currency in the world is built to be devalued. The only question is, will it be devalued at 7% a year versus desirable assets? Or will it be devalued at 14% a year? Or will it be devalued at 40% a year? But it is 100% certain that the currencies will be devalued. The bonds are going to have a negative real yield. They'll be devalued. Value stocks and commercial real estate that's valued partially on the cash flows will be devalued. So Bitcoin kind of represents more like that trophy asset, like the one of a kind trophy piece of art, or the one in a kind franchise, or the one in a kind beachfront property. Everybody wants. It's not valued based on cash flows. It's valued based upon its scarcity and desirability. Now, we have lots of examples of people that buy Ferraris as a store of value, or Rolex as a store of value, or commercial art, or art as a store of value. But the ideal money is something liquid and fungible. And Bitcoin is liquid and fungible. So it's like that high quality, desirable real estate, but it's like buying a pure city block in the most desirable city on earth. And it's got a global brand, because it's not, Tokyo's only interesting if you speak Japanese, and Paris is maybe interesting if you speak French. But, Bitcoin is neutral in cyberspace. The Chinese like it, the Russians like it, the Americans like it, the Europeans like it, the Africans like it, the South Americans like it. Why wouldn't you like it, right? And it passes this last Bernard Arnault test, which is you ought to buy something that someone richer than you and more sophisticated than you will want to buy from you in a decade. And if that's what you're buying, then you're probably going to be okay.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.